Hey everybody, it's Kyle Winn here with Sage Realty, and today I'm talking to all of our first-time home buyers out there. So many of our first-time buyers ask us many of the same questions, and usually the first one they want to know the answer to is, how much money does it actually take to buy a house? And I'm not talking about the cost of the house or the condo or whatever you're looking at. We're talking about how much cash out of your pocket do you need to put up to close escrow on your first home. So stick around, be sure to subscribe and hit the little bell, and we'll dive right in. Thanks so much for stopping by and checking out this quick video. This is going to be extremely useful for all of you first-time home buyers out there. Now maybe you've been working hard and possibly saving up some money, and now you've decided the time is right for you to finally buy your first home. But I know you're wondering how much money it's actually going to take out of your pocket to get into your first home. Now that's going to depend on quite a few variables, like where the home is located, what type of loan product you might be seeking, among other factors. But today I'm going to give you a general idea about how much money it's going to take out of your pocket to get into your first home. So let's dive right in. For this video, I wanted to be able to provide you with an example and show you some actual figures that you might come across when you're buying your first home. One document that you're going to receive from escrow is what's called a buyer's estimated settlement statement. Now this statement is going to outline all the costs and the credits that you'll receive during this escrow and the purchase of your home. Now I wanted to give you an example, but I can't actually show you specific settlement statements from deals that we've done, so I kind of created a little bit of an abbreviated settlement statement just to kind of get the point across. So when you actually go and buy your home, your settlement statement is going to look a little bit different than this. It's going to be a lot more detailed, but I just kind of condensed one of these settlement statements into an example format to help kind of get the point across. So let's dive in here. For this settlement statement, I prepared for our friend Jane Doe that she's buying on Main Street in Anywhere, California. So Jane is purchasing a home for $600,000, and she's elected to go with a 5% down conventional loan. So the first item after the proposed price of this home of $600,000 is going to be her down payment of $30,000. Now again, your situation is going to be different, especially depending on the type of loan product you go with, whether you go with a conventional loan, FHA loan, VA loan, or USDA loan. That's going to change a whole lot of variables here. But for this example, we're just saying Jane is going with a conventional loan and she's putting 5% down. So right off the top, she's going to have to come up with $30,000 out of her pocket for the purchase of this home. Now to get into closing costs, again, I've abbreviated a lot of these, and your actual settlement statement will be much more detailed than this. For example, you might have a total lender fee of $1,600. Now the actual lender fee is going to be a little bit less, and then you're going to have some other wire fees and notary fees and things like that. But let's just say that all-in lender fee is $1,600 for this example. Another thing you're going to have to pay for is what we call prepaid interest. Now that's going to be required when you close escrow somewhere in the middle of the month. So for example, if you closed escrow on say the 10th of the month, which might have 30 days, you need to prepay interest for those next 20 days before you actually start making mortgage payments on the home. So that's where that comes in, and obviously that prepaid interest is going to depend on the price of the home, the interest rate on the loan, your down payment, and many other factors. Another thing you're going to have to pay for up front is prepaid homeowners insurance. For this example, we assume that Jane had to prepay 3 months worth of insurance, and we assume that the insurance on this home was going to be about $100 a month for a total prepayment of $300. She's also going to have to prepay property tax, and the amount you're going to have to prepay is also going to depend on when you close escrow on the purchase of your first home. But for this example, let's say Jane had to prepay her property taxes for 6 months, and the total property tax is going to depend on where the home is located and the tax rate. But for this example, we said 6 months of those property taxes are going to be $3,500 for Jane Doe. Now lastly, when you do get a loan on a property here, you're going to be required to buy lender's title insurance. Now that title insurance for the lender is going to protect the lender from any claims on the title of the property, and you will also have your own owner's title insurance, but it's very common to have the seller pay for your owner's title insurance policy in this market. However, you will be required to purchase lender's title insurance, and in this example, that total cost might be about $1,200. Now, of course, I can't forget to mention escrow fees. It's very common in this market for both the buyer and the seller to pay their own separate escrow fees, and in this case, it might be about $2,000 for this $600,000 home. And again, I've abbreviated this settlement statement. The escrow fee for a $600,000 home might actually be more like $1,700 to $1,800, something like that. But then, of course, we're going to have some other notary fees and messenger fees and things like that. So I just assumed about $2,000 for this example. Adding all these costs up over here on the right-hand side is going to lead us to a total buyer's expense down here of $39,400. Now that includes the $30,000 down payment that Jane is going to be required to make, as well as another $9,400 in what we'll call closing costs. Now, in this example, these numbers might actually be pretty close to real life. If someone's buying a $600,000 home in our market, their total closing costs might be about $9,400. For our clients, we tell them to plan on about 2% of the purchase price. So if Jane Doe came into my office and wanted to start the process of buying a home, I would coach her into making sure that she had at least the down payment plus 2% of that purchase price, which in this case would be $12,000. So I would want to make sure that Jane had at least $42,000 in her bank account to be able to purchase this home. Now, out of that $42,000, we can see here that she's going to spend $39,400, leaving her a little bit left over, which is totally fine. What we wouldn't want to have happen is that Jane's total cost to purchase the home be greater than what she has saved up in the bank. So in this case, like I said, I would make sure that Jane has at least $42,000 if she was planning on putting down $30,000, and with her total cost to purchase of $39,400, she's well within her means of purchasing this home. Now, as I said at the beginning of this video, this settlement statement that I provided here is only an example, and your situation will definitely be different than this. But at least this helps get the point across, and hopefully you understand a little bit more about what costs you're going to incur when you do purchase your first home. Also, as I mentioned, these figures are going to vary greatly depending on the type of loan product that you go with when you do purchase your first home. Now, as I mentioned, you might go for a conventional loan, maybe FHA, VA, or even USDA, but talk to your lender and see what they might recommend based on your personal financial situation. I hope this information was useful for all you future first-time home buyers out there, but if you have any questions about anything that I covered, please drop those in the comments below and I'd be happy to answer them, because like I said, this example that I provided you was very abbreviated and your real life scenario is definitely going to be different. But anyways, be sure to subscribe and hit the little bell so you can see all my future videos about buying and selling real estate.